Good afternoon. Welcome, everyone, to today's conference call. At this time, your lines have been placed on listen only for today's conference until the question and answer portion of our call, at which time you will be prompted to press star one on your touch-tone phone. Please ensure that your line is unmuted and please record your name when prompted so that I may introduce you to ask your question. Our conference is being recorded, and if you have any objections, you may disconnect at this time. I will now turn conference over to our host, Dr. Heather Brown. Doctor, you may proceed.
Thank you very much, Jill. Welcome, everybody. Thank you for taking time out of your end of summer day to come and join us for this webinar on student debt. We have today a really great speaker, Kristen Evans. She is our section chief, the CFPB section chief for students and young consumers. She's been at CFPB in a number of roles for quite a while, and she is an expert on student loans, student debt, and a lot of other issues that young consumers face. And she has been rebuilding our student program, and I think you'll really enjoy her as a speaker, and certainly she'll be a great resource for those of you that run into challenges and issues, and even may be interested in having her speak at groups that you have as well. So I'm not going to take too much of her time, but I'm going to run through my preliminary slides that I have to go through, and also to tell you quickly about the FINEX program for those of you that aren't familiar. I'm Heather Brown, and I am the lead for the CFPB FINEX program. And I wanted to go through our disclaimer first, that this presentation is being made by representatives on behalf of the Bureau, myself and Kristen. It does not constitute legal interpretation, guidance, or advice of the Bureau. Any opinions or views stated by us are our own and may not represent the Bureau's views. Also, inclusion of any third-party links that are not our website does not necessarily reflect our endorsement of that site or any products that might be offered. I don't think we have any that sell anything on it today, but and just to know that, we may not have vetted third-party sites, so you have to use your own judgment, and buyer beware. We may not have vetted the content, the products, or the services. Okay, so let me just also tell you quickly about the mission of the Bureau. Many of you already know it, so I'll run through it, and if you have questions on it, you can always ask me at the end. But the Bureau regulates the offering and provision of consumer financial products and services under federal consumer financial laws, and educates and empowers consumers to make better informed financial decisions. And one of the ways that we do that is through our CFPB FINEX program, which stands for Financial Education Exchange. We're currently over 6,000 members, and all of the members are financial intermediaries, financial educators, anyone that provides some sort of financial literacy training or services or coaching to the consumer. Our goal with this program is to stretch our resources by empowering and working with our audience to be able to be more efficient in their reach by providing them research, materials, and meetings to connect and interact with one another. We host regional meetings about every quarter. We're finishing up our regional meetings this month with the one in West Virginia and one at the Center for Financial Literacy and one in Madison, Wisconsin at the University of Wisconsin in Madison, I'm sorry. And so anybody that's in those areas and is interested, you can email the email address at the bottom of this slide, cfpb_finex@cfpb.gov. If you happen to be interested in having us come out and host a regional meeting in your area, we're actually getting ready to plan for the next year, and so please reach out to that same email address. We can also come out and do training programs for groups of financial intermediaries if you have a need. We have some of the topics listed here, but we have materials pretty much on any topic that you'd want to cover. And the other thing we can tell you is that we are going to be giving some information out soon on our conference for 2020, which will be held next spring. So stay tuned for that as well. So those are some of the key provisions of our program. And I'm going to move on to the next slide just to highlight a couple of, a couple of other things. This is our web page for adult education, and that is the link at the bottom. And you can just get to it by going to consumerfinance.gov, clicking practitioner, and then clicking adult education. And you'll find this site. If you notice the hyperlink below, this is last month's webinar. If you click on that hyperlink, you'll be able to see past webinars and download the slides from those webinars and watch the video recording, and there's also a full transcript. And you're welcome to repurpose those for your own training. The only thing we ask is that if you change them, you take our logo off of it and put yours on, and if you leave them the same, that you leave the logo as it is. But we don't of course want anybody to change the materials without taking our logo off of them. But other than that, you're welcome to use the slides as needed, and many intermediaries use them regularly to build their own programs. And also, there's a lot of other information there. So we welcome you to visit that and look around in there as well. Okay, so then the last slide, I don't know why I'm working backwards today. I keep wanting to head in the wrong direction. The Bureau link for our page is the top one, which just covered. The middle link is for the email box that I will manage and answer. So we usually try to answer within 24 to 48 hours, many of them the same day, unless I'm out because I am the main person watching the box. But we will get to you quickly. So feel free to email that if you have any questions. And if it's for someone else in the Bureau, I forward it to them. And the last link is to our LinkedIn site for the Financial Education Exchange. And it's getting pretty busy with comments, and you can log in there anytime, ask a question, post something that's related to financial education. We just ask that no heavy marketing. If you have a program or something that you're training, that's fine. But so those are the resources that we have. I also just want to let you know that we have another webinar coming up this month. We have two on the 29th of this month of August, at the 2 to 3:30. This one's a little longer. We're going to have Dr. Sue Kerbel, who's going to give out information and train you to use her new Money Circle toolkit that she's developed for the Bureau and for you all to use. And it's a great resource that talks about how family networks impact your financing. So please stay tuned for that. That was on the same newsletter that went out for this one. And another message will be coming out shortly on that to the list as well. Okay, so that wraps up my introductory slides. I just want to let you all know you can enter questions in the chat box or the Q&A box. I'll check them both throughout. We'll address any questions that come in at the end. We'll also open the lines at the end for questions as well. So feel free to write your questions, or if you prefer to wait and speak them at the end, that's fine as well. With that, I'm going to switch my slides over to the actual program on student debt and pass controls over to Kristen, and then we will be ready for our presentation of the day. Kristen, you should see controls now.
Yeah. Okay. Hello, everyone. I wanted to thank you all for joining us today. As Heather mentioned, my name is Kristen Evans, and I am the Section Chief for Students and Young Consumers here at the CFPB. So we've put together a webinar for students, prospective students, their families, and those who help students to discuss what you need to know before taking out and repaying student loans. So let's get into it. This is the same disclaimer that Heather's already gone through, so I will skip that. So before we get started, I'm going to briefly give an overview of the section in our division. So I'm from a division here at the CFPB that focuses on educating and engaging consumers so they can make more informed financial decisions. The division also focuses on several specific populations, including service members and veterans, those who are economically disadvantaged, as well as older Americans. But I am from the section for students and young consumers, and that focuses on one specific population, which could include young adults who are thinking about attending post-secondary education, or those who have already attended and graduated from post-secondary education. So something about this section is that we help students and young adults to manage their money, build credit, save and pay for college, and repay student debt. So I wanted to start off this webinar by giving a bit of background into the specific population of students and young consumers. So more parents and young adults are beginning to save for college. And recent studies have shown that the percentage of Americans saving for college has increased considerably since 2009. But it still means that less than half are setting aside money for their children's college education. Plus, only a small fraction of students receive a sizable amount of scholarship money. So this really means that we can expect a sizable share of students who will need to consider financing their degree. And that same study also found that about 45% of young adults have a student loan. So, and those students graduate on average with about $30,000 in student loan debt. Students and other young adults are also at the stage in their life when they are entering the financial marketplace for the first time. They're starting to use or think about using financial products and services, and then they're also thinking about building credit. But young adults continue to struggle to meet their current financial obligations, and about 1/3 of young adults receive financial help from a family member. And they also have very little savings or do not have any savings at all. This leads to about a half of the student loan borrowers to feel financially constrained and stressed when it comes to repaying student loans. So this stress may also be exacerbated by the fact that some students may not know the difference between federal and private student loans, or they may not know whether they borrowed federal or private student loans. They may not know how to calculate their monthly payment before they begin repaying. And this fear and stress has led to some regret for student loan borrowers, and more than half said they would change their choice about taking out student loans. This is where financial education can really assist student loan borrowers and young adults to have the confidence to not only act but also plan for their own financial education and for their own financial situation. So financial education experts say that providing consumers with information is only part of the solution. Being able to manage your own financial life requires a combination of knowledge and skills. People need to be able to analyze costs and risks and consequences of a particular financial product or service. They also need to know where to go for help. Okay, so this is the domino effect of student loan debt. So we have heard from student loan borrowers that student debt can impact their personal lives. For instance, because of student loan debt, they may be delaying getting married or forming a family. They may delay buying a house, or they may never buy a house. They may delay saving for retirement, or they may not save enough for retirement. Student loan debt may also have an impact on their job choices after graduation. And they're less likely to start a business due to the strain of a student loan payment. So with that in mind, I'm going to talk about some of the financial resources that we have available at the CFPB. Okay, so for this webinar, I'm going to go over a few different topics, from the different ways to pay for college to tips to review your financial aid offer from different institutions, managing money, and then preparing to repay student debt. Throughout the presentation, I'll also discuss different resources from the CFPB to help student loan borrowers or yourself through the student loan journey. Okay, so comparing programs and majors. So students or if have finally decided that they want a degree or certificate after graduating high school, but there's a lot to consider before you actually step foot onto campus for your first class. The most important reason that one goes to school is to learn and obtain a degree or a certificate that will actually help them pursue a chosen career path. It's always a good idea to look into several different schools. It's good to take a look at each school's programs to see if it has the type of degree or certificate that you really want to obtain. You should think about whether the setting and location of the school will fit your personal preferences. Do you prefer a large or small campus or a small student body population? You know, these are personal preferences, but they should be taken seriously. You want to be able to feel comfortable to complete the degree or program. We also advise everyone to look up the graduation rates for each school and the average salaries for graduates in your program. This will help one decide whether the school or program will help them reach the post-graduation goals and their future career. Okay. So before you step foot on campus, you need to start shopping around for a school that is a good fit for you. If you are a student that is already through the application process, or you're working with a student that's going through the application process, you may already have a good idea at what point the school you want to attend, its costs, whether you'll need financial aid, and how you plan to cover any financial gaps. But if you're preparing for college in the next few years or working with students who are making these decisions, there are a few good tips to follow. After you fill out the FAFSA, the school will give you a financial aid offer letter. Not all financial aid offers look the same. For instance, loans may not be clearly labeled. If you don't know whether the financial aid offer is stating that you get free money, such as scholarships and grants, or whether it's a loan, you need to ask the financial aid office for more information. So if you're comparing financial aid offers, you also want to add up all the scholarships and grants for each college to determine how much you'll have to pay out of pocket, either through savings, family contributions, or taking out student loans. So you compare those out-of-pocket expenses, including your living and housing expenses, to determine which school is a good financial fit for you. Some financial aid offers include information on loans that your parents are required to take out. Those are formally known as Parent Plus loans. If you receive a financial aid offer with Parent Plus loans, it's a great time to have a conversation with your family to see whether taking out these loans makes sense for your family. And again, ask questions to financial aid office if you need further information. So we also offer a comparison tool that allows students to compare the cost of college and financial aid offers from different higher education institutions. It allows students to input costs of attendance and their financial aid packages, including federal student aid, private funding sources, and scholarships for up to 3 schools. And allows the student to compare the costs of each program. Even before students apply, they can use this tool to help them decide which schools will be the best fit for them financially. Students can use the tool to adjust how much financial aid they expect to get from a school, or they can use the tool to compare how much their dream schools would cost if they got no financial aid at all. This tool actually allows students to get a better overall picture of their future financial burden when deciding which schools to actually apply. And it may help them possibly choose a school that allows them to take on less student loan debt. Ultimately, the student may not choose the college with the lowest net price or the college that will put them with the least amount of debt, but at least knowing the net price can help you make a more informed decision. Okay, so let's get into the nitty-gritty about what are the different ways to pay for college. So you've applied to schools and you're looking into them and you need to decide how much you're going to pay for college. So the first option is to search for scholarships and grants. Grants and scholarships are the type of financial aid that does not have to be repaid. This is free money. Grants are often need-based, and while scholarships are usually merit-based. Like I said, this is free money, but sometimes it comes along with strings that are attached. Usually you need to take a certain amount of credits per semester, or you need to maintain a certain GPA while enrolled. So we actually urge people to read the fine print so they know how to remain eligible to receive that money. So after you've taken into consideration all of your free money, you should have a conversation with your family about how much they can realistically contribute, if at all. If your family decides that you have funds to contribute, make sure that you have enough savings for a rainy day and are still saving for retirement and other necessary expenses. After all of that, if you still have a gap in your funding and you must borrow to cover your education, then we recommend that you apply for federal student loans. So for most borrowers, it's best to max out on federal student loans before you borrow private student loans. There's some important differences between federal student loans and private student loans. Federal student loans can be more manageable for students in a few different ways. So first, in some cases, the federal government will subsidize or pay the interest on your federal student loan while you're in school. So this can help you save money in the long run. Second, if your interest rate for a federal student loan is generally fixed and it's not variable. Private student loans can have a fixed or a variable interest rate, and variable interest rate means that your interest rate and your payment could change. So having a constant payment may make it easier for your future finances since you won't have any surprise or unanticipated increases. Also, federal student loans allow you to enroll in a repayment plan based on your income. Later on in this presentation, we're going to get into different repayment plans. But really, this repayment plan limits the amount you repay each month based on your income. And this can provide you a repayment plan that fits with your finances. The federal student loans also offer loan forgiveness, which may be available after 10 years working in public service. So it's just a note about federal and private student loans. So if you want to obtain federal student loans, you must fill out the FAFSA, and you have to also fill out the FAFSA to be eligible for work study and or federal grants. If your grants and scholarships and your federal student loans, after you added them all up, are not enough to cover your cost of education, you should really consider other options. You can either cut costs, you can consider getting one or more roommates or a part-time job. Or you can explore whether a different program or institution would be a better financial fit for you. After all of that, if you still have a gap in funding, you can shop for a private student loan. Private student loans are student loans that are not federal student loans. So these loans do not offer the same flexible repayment terms or protections provided by federal student loans. So private student loans are not funded or subsidized by the federal government. Private student loans are funded by banks, credit unions, and state loan programs and other types of lenders. Private student loans generally have variable interest rates, which means that they can reset every month, just like we talked about, and so their payments may change. In some cases, you can get a private student loan at a lower interest rate than a federal student loan. But you really need to take into consideration other factors that federal student loans provide that are not universally offered in private student loans, such as the availability of flexible repayment plans based on your income or the possibility of loan forgiveness programs. So that was a lot to capture in one slide, but the CFPB provides provides a web tool to help you plan for your financial life. These web tools will focus on big financial decisions such as paying for college, but they can also include smaller life decisions that can have a big impact. So on this slide, you will see a screen grab of our Paying for College tool. As you can imagine, paying for college is some of the first major financial decisions that a student will make. So we've created this tool to help students walk through some of those important questions about paying and financing college. This tool can actually be used by prospective student loan borrowers, current students, or those who are working with students as they prepare to take out student loans or prepare for the upcoming semester. So, as we'll get to in later slides, the tool also helps students make comparison between financial aid offers. It provides information and advice for optimizing to repay their student loans. And we also offer student financial guides that help students choose a loan and manage their college money. Okay, so let's dig into the tool. So once you've decided you on a school and you want to figure out how to pay for it, after scholarship, grants, and savings, if you still have a gap to fill, we offer guides on how to choose a loan. So this is a web tool. It's just a screen grab of the web tool, but it's an interactive tool that walks you through key questions when you're starting to think about taking out a loan. It walks through the different types of loans, from federal to private loans, and also provides tips on filling out the FAFSA. So all of the information that I've given on previous slides are also captured in this web tool, and it's an easy-to-use interactive web tool. It also goes into other information, such as alternatives to private student loans. Yeah. So now we've moved on in our student loan journey, and we're preparing to go onto campus. So let's talk about money management. So first, open up a bank account. We urge students to think about choosing a bank or credit union that will be convenient for when they are at home and at school. We also urge people to shop around. We don't want people to feel limited to only the banks or credit unions that have ATMs on or near their campus, because some banks and credit unions will automatically reimburse fees for using any ATM. You can consider accounts that offer convenient services such as remote check deposits, mobile apps, and online bill pay. After your school takes out your cost of tuition, fees, and any on-campus living expenses from your total financial aid award, there's often money left that you can use for other expenses, like books. You normally have several options for how you get that money, including direct deposit to your bank account, to a card that may also double as their student ID, or they can get it by check or cash. Once you have a bank account, we tell students to sign up for a direct deposit, even before classes start. Because if they're expecting money from their financial aid office, they'll often get the money faster than having a school write them a paper check. Next thing is that they should plan to budget for each semester. So if you have a fixed income, make sure you have enough to cover all of your necessary expenses, including housing and food. If there's a gap, like we talked about earlier, you can either cut costs or consider working part-time. We also ask students that they should keep track of how much they are borrowing. We say that you should remember to check in with your current financial plan, and if you're able to make payments on your student loans to cover the interest, you'll save money in the long run. So within that Paying for College suite of tools, we also offer a web tool about student banking. It really is helpful for young people to know how to manage their money while in school, and this is a tool that will help them through navigating those decisions of opening up a bank account and how to manage their money. Okay, so we're now preparing to repay student debt. So you're about to graduate or to leave school. We always tell students to get their information in order. For most students, they are given a 6-month grace period from when they depart school or drop below full-time, which they do not have to pay their student loans. After this grace period, they should be prepared to make their monthly payments. So we tell students to log into this, the Department of Education's website called the National Student Loan Database. The link is provided here to check the status of their federal student loans. Unfortunately, there's no similar database for private student loans. So students should receive a paper in the mail with their payment amount and their contact information. and it usually includes information about where to send their payment or set up an online account. So we tell people to open up your mail, even if you don't recognize the company, because it could be the student loan servicer attempting to contact them to get them ready to repay their student loans. Also, during this grace period, students have the option to choose a repayment plan for their federal student loans. So next, we're going to dig deeper into those types of repayment plans. Okay, so the repayment plans for federal student loans, there are many of them, and they're listed on this slide. But the traditional and default student loan repayment plan is the standard fixed 10-year repayment plan. However, there are several other federal repayment plans that could be a better financial fit. So traditional payment plans are based on your payments and how much you owe and the interest rate on your loans, while income-driven repayment plans, which are listed in the bottom half of the slide, set your payments based on your income and family size. So we also want to note that you can change your repayment plan at any time for free. You don't need to pay a third party to change your student loan repayment plan. But keep in mind that switching plans for one with a lower monthly payment often means that you're paying more over the life of the loan. So when it comes to federal student loans, your best option is to get a more affordable payment through income-driven repayment plans. You can always make extra payments if you're able to. So let's go through the different repayment plans. The standard repayment plan, it may be a good option if you can afford the monthly payments. Payments are set in equal amounts over a 10-year period, and you can benefit by paying off your loan earlier than the other plans that are listed here because you'll be paying less interest overall. The graduate repayment plan is a way for you to repay your student debt for those who expect their incomes to rise over time. Payments start off low and increase every 2 years over a 10-year period. The extended repayment plan enables you to extend the time you have to pay back your student loans up to 25 years. If you extend the term of the loan, you will pay substantially more interest over time, but your interest will be significantly smaller. There are some restrictions to enrolling in the extended repayment plan, so we urge students to contact their servicer for more information before converting to this plan. So let's dig into income-driven repayment plans. They're designed to be affordable alternatives to the standard repayment plans. Your monthly payments are based on your income and family size, and depending on your family size and income, your monthly payment could be as low as $0 per month. Okay, so IER plans have extended repayment periods of 20 to 25 years, after which any remaining balance is forgiven. The key to these income-driven repayment plans is that you must recertify your income and family size each year with your servicer to remain on the plan. So depending when you took out your loans, you may qualify for one or more of these plans listed here. Under the revised pay-as-you-earn or repay, your monthly student loan payment is capped at 10% of your discretionary income. And any debt that is forgiven after 20 years of monthly payments and any amount can be forgiven after 20 years and for undergraduate loans and 25 years for graduate loans. Under the pay-as-you-earn or what we call payee or pay, your monthly federal student loan payment is 10% of your discretionary income. But your repayment amount will never be more than the payment under your 10-year standard plan. I know that's kind of confusing to think about, but as your income rises, if you're repaying under the revised pay-as-you-earn plan, your payments could be higher than your standard 10-year monthly payment. That won't happen under pay-as-you-earn or the other income-driven repayment plans listed below. So under income-based repayment, commonly known as IBR, your monthly student loan payment is capped at 15% or 10% of your discretionary income, depending on when the loans were taken out. They're never more than your standard 10-year repayment plan, and any remaining debt is forgiven after 25 years of monthly payments. And income contingent repayment, or ICR, is capped at 20% of your discretionary income. And any remaining debt is forgiven after 25 years of monthly payments. Okay, so that was a lot talking about federal student loan repayment plans, but let's dig into private student loans. So unlike federal student loans, there are no standard options to lower your monthly payments on a private student loan. Every lender is different. Some lenders will offer a modified repayment plan that will extend your repayment period, which will reduce your monthly payment, but you will need to contact your lender to learn more about alternative repayment plans that they offer. Okay. On this slide, it's a screenshot of our Repay Student Debt tool. So this provides information to schools or to students who are attending school to understand how much they need to repay their loans and ways to do it. This tool will be particularly helpful for students who are thinking, who are just about to graduate, or those who are already in repayment. The website provides what they can and can't do while they're repaying their student loans, especially if they're struggling to make those student loan payments. The tool allows borrowers to consider their options by selecting the repayment scenarios based on their current situation. This can benefit borrowers by providing advice related to their specific situation, their loans, whether they have federal or private student loans, and just basically their general situation. Okay. So I want to briefly cover some other resources that we have available. The first is Ask CFPB. This is a digital resource that gives consumers answers to commonly asked money questions and provides how-to guides on specific money topics. There are questions specifically related to student loans in here, and so it is a great resource, and you can find this on our website at consumerfinance.gov/askcfpb. We also offer a different resource if you're a student or you're working with a student who's not really sure what questions to ask or how to get started. We've put together a landing page of the most need-to-know information related to student loans and borrowing student loans. The goal of this page is really to surface the most critical information a student would need to know about paying for college or repaying student debt. Overall, this page is just used as a beginning place for financial newcomers and a place to quickly learn about the actions available to fix any emerging issues that they're facing. Okay. So we also have resources for practitioners. I wanted to highlight that if you're working with students, if you're a financial aid professional or a financial educator, you can find resources to help you work with students, and you can find that at consumerfinance.gov/students. The Bureau also offers blogs and consumer advisories on a series of topics. They are all available on our website. I provided a select few of the blogs related to students, but there are many more topics and even wider than student loans and just student loan issues available on our blog. The blog can also be found at consumerfinance.gov. I should also mention that many of our resources are available for ordering for free, either through print, download, or bulk ordering. We also offer some publications in other languages. While not all resources are available in all languages, you can browse which publications we have available by visiting the GPO printing office link on this website. Okay. So I thought we could switch gears in this webinar to talk about a topic that I get questions all the time about, and that is public service loan forgiveness. It is a complicated program. I'm going to try to break it down for you guys quickly and also offer some resources about how to apply and qualify for public service loan forgiveness. So here's the overview of what we're going to talk about. We're going to talk about what is this program if you've never heard of it. We can also talk about how you can become eligible, what you should be aware of, and how to apply for it. Okay. So what is public service loan forgiveness? So it's a program that forgives the remaining balance on your federal direct loans after you've made 125 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying public service employer and then completing the application process. That sounds like a mouthful, and it is, but we'll break it down for a little bit. Okay, so this is the roadmap to qualify for public service loan forgiveness, and you need 4 elements. You need to make sure that you have the right type of loans. You need to make sure you have enrolled in the right repayment plan. Make sure that you work for a qualified employer. And finally, make sure that your payments are counting towards public service loan forgiveness. So let's walk through those 4 key elements. The first is to make sure you have the right type of loans. So the only loans that qualify for public service loan forgiveness are federal direct loans. However, if you have other federal loans, such as those originated under the Federal Family Education Loan Program, or FELP loans, or if you have loans under the Perkins Loan Program, you may be able to consolidate those loans into a new direct consolidation loan to qualify for public service loan forgiveness. You can learn more about what type of loan you have by going to the National Student Loan Database System, which the link is on the bottom of this slide. So borrowers with Perkins loans should really talk to their servicer about the risks associated with consolidation, because if you have a Perkins loan, you may give up other benefits by consolidating into a direct loan. So you need to weigh those options before you consolidate into a direct loan. So PLUS loans made to parents, or Parent PLUS loans, are eligible for public service loan forgiveness. But the repayment plans that are best for public service loan forgiveness are not eligible for Parent PLUS loans. So you actually run the course of repaying the entire balance of those loans before you're even eligible for forgiveness. So if you have Parent PLUS loans and you're thinking of that you want to qualify for public service loan forgiveness, I recommend that you consolidate into a direct consolidation loan and then begin repaying under an income-driven repayment plan. The specific one for this case is called Income Contingent Repayment Plan, which we've covered in earlier slides. So the second key element to public service loan forgiveness is to make sure you've enrolled in the right repayment plan. So all of the income-driven repayment plans qualify. They're listed here on this slide. The other plan that also qualifies is the standard 10-year repayment plan. That is the standard 10-year repayment plan is the repayment period of 10 years. So you actually may pay off the loans before you have anything left to forgive. So we usually say that if you want to enroll in public service loan forgiveness, that you should consider enrolling in an income-driven repayment plan. Income-driven repayment plans set your payment based on your income and your family size that we've talked about earlier. So this would reduce your monthly payment, but it may also maximize the amount that's forgiven at the end. So that's why IDR plans are your best choice if you're seeking public service loan forgiveness. If you're unsure of what type of plan you have, you need to contact your federal student loan servicer, and they'll be able to tell you what plan that you're paying under. Okay. The next key element to public service loan forgiveness is to make sure you work in a qualifying job. So the type of qualified employers include federal and state and local governments, military service, and certain not-for-profits that have a tax designation as a 501c3 entity. There are also some exceptions for employers who work in public education. So you must work full-time, which means you must work the number of hours that your employer considers to be full-time. or it has to be more than 30 hours a week. This question comes up a lot, is that what is the definition of full-time, especially if you work multiple part-time jobs. So you can combine multiple part-time jobs to qualify for public service loan forgiveness, but only as long as the number of hours cumulatively of those part-time jobs average more than 30 hours a week. So it's also important to note that it doesn't matter where, it only matters where you work, not what you do. So if you work in a public school system, which is a qualified employer since it's a state entity, you don't have to be a teacher. You can be an administrator or a custodian, and you could still qualify for PSLF because it matters where you work, not what you do. Okay, so to figure out if your employer is a qualified employer, you could submit an employer certification form. A link is available on this slide. While the form is not mandatory, it is a best practice to submit the completed form at least once a year. It's also good practice to submit one every time you change employers. This way you can stay on top of your qualifying payments. And of course, always remember to keep copies for your records. Okay, last but not least, you need to make sure that your payments count. You can become eligible for public service loan forgiveness after making 120 qualifying monthly payments. These payments do not have to be all in a row, meaning that you can resume making qualified payments if you temporarily leave service or after periods of deferment, forbearance, or unemployment. Only payments after October 1st, 2007 qualify for public service loan forgiveness. This is because that's when the program was created. So the earliest anyone could have qualified for public service loan forgiveness was in 2017. When you make payments, they must be in full, and they must be within 15 days of the due date. Any extra payments, or also known as prepayments or overpayments, they do not count towards public service loan forgiveness. You only receive credit for one payment a month. So it doesn't really work in your favor for public service loan forgiveness to make a large lump sum payment throughout the year, because you want to make a payment each month. So determine how many qualified payments you have if you're already trying to pursue public service loan forgiveness. You need to submit a completed employer certification form, or the ECF form, to the PSLF servicer, also known as Fed Loan Servicing. The servicer, Fed Loan Servicing, will review the form, and they'll compare it to your account history and determine how many payments count towards the 120 payment requirement. Okay, so I wanted to highlight some of the common problems that people are facing when they applied for PSLF and were denied. Hopefully highlighting these issues will help you take a closer look at your situation to see if you may have some problems, and hopefully you can catch them in time to correct the issue. So based on the Department of Education, 47% of people were denied because they had missing or incorrect information on their application form. 32% did not have eligible loans. So you need to make sure that you have federal direct loans. Those are the only loans that qualify for public service loan forgiveness. 21% did not work for a qualified employer. So these were the top 3 reasons why people were denied for public service loan forgiveness. So if you're en route to qualify for PSLF, or you're working with someone who may qualify for PSLF, make sure you check these top 3 elements, as they are the common problems to being denied for public service loan forgiveness. Okay, so what else should you be aware of? There are a few things that you should be aware of. So this is kind of complicated, but consolidating a non-qualifying loan, such as a Perkins loan or a FFELP loan, into a direct loan will restart the clock for PSLF. So, for example, if I had a FFELP loan and I've been working in public service, let's say in a state government for 6 years, once I consolidate my loans into a federal direct loan, I will have to start over at zero. Therefore, the previous 6 years working in public service do not count towards PSLF. So I will need to work another 10 years in public service to qualify for PSLF. So the best way to avoid this situation is to make sure that you have the right loans, the right repayment plan, and you work for a qualified employer as soon as possible. Because you don't want to be assuming that you're qualifying for this program when you're not. But also, as I mentioned earlier, if you choose to consolidate these loans, there are some things you need to take into consideration, such if you have a Perkins loan, you may become ineligible for certain benefits of that Perkins loan. And also for my teachers, there are some highly qualified teachers in certain low-income areas can be eligible for certain teacher loan forgiveness programs. You cannot obtain a benefit both under the teacher loan forgiveness programs and the public service loan forgiveness program for the same service. So teachers will need to decide whether they want to choose forgiveness under the teacher loan forgiveness program or or public service loan forgiveness. And of course, the big thing to qualify for PSLF is that you need to recertify your income-driven repayment plan each year. Okay, so how do you apply for public service loan forgiveness? You've gone through this whole process and you've already made 125 qualifying payments. So then you would need to submit an application form. You can either do it online through the link on this slide, studentloans.gov/PSLF, or you can download a paper application and mail it in. But either way, you need to submit a completed form only after you've made 120 qualifying payments. So as I mentioned, this is a complicated program, but don't worry. We have guides to help students and those who work with students so they can work through this, how to apply and qualify for public service loan forgiveness. We have guides that are tailored to specific populations, including service members, teachers, and first responders. So you can find these guides listed on the link on this slide. Okay. We also have a few other resources to help you with public service loan forgiveness. The first, you can contact a loan forgiveness specialist at Fed Loan Servicing. The number is listed here. You can also check the Department of Education's website for more information. If you run into a problem with the student loan, the CFPB has a complaint function, and you can submit a complaint to the CFPB. However, if you are having a problem with public service loan forgiveness, you need to submit a complaint to the Department of Education. The Department of Education has their own student loan ombudsman, which will be able to assist you through public service loan forgiveness complaints. We also have some information for employers. Any employers that want to provide information to their employees about how to qualify for PSLF, we have a toolkit that's available on our website. Okay. Last but not least, I don't have a list of everybody on this webinar, so if you would like to receive additional information about our work, I would urge you to visit either consumerfinance.gov/students or sign up for our email updates. You can also send us an email at students@cfpb.gov. Okay. I think we have some time for some questions, so Heather, I turn it back to you.
Thank you so much, Kristen. That was wonderful. I learned a lot myself, and you've just covered every area that I had questions about in the past. So thank you for doing such an excellent job on that. Great information. We're going to ask the operator to give instructions to the participants on how to queue up a question. And then after that, maybe you and I will just talk a bit, and maybe some questions will come in during that time. I don't see any questions in our chat or our Q&A at this time. Operator, could you give the instructions, please?
Certainly. If you would like to ask a question, please press *1 on your touch-tone phone. Please unmute your line and make sure to record your name when prompted so that I may introduce you. Once again, it is star 1 at this time.
Thank you so much. Kristen, one question I had when I was looking at that, it said that you didn't have to make consecutive payments. In other words, it could be a gap. But then it also said if you were 15 days late, that you would not qualify. If you had to be within 15 days of payment. And so does that mean that it has to pretty much be continual unless you have some sort of forbearance?
So that's a really great question. So basically, you need to make a payment every month for that payment to qualify, or you need to pay one payment per month to qualify. So let's say I've made a payment for August. That month qualifies for public service loan forgiveness. But if in September I submit a payment that's 15 days late, that payment just doesn't count towards public service loan forgiveness. However, if you work, so the other option is that if you work in public service, let's say for 6 years, and you take a break, you're either unemployed or you leave for a for-profit service, you can always pick back up and when you return to public service to work. So you just don't have to be consecutive.
Okay, great. That makes a lot of sense. I understand now. Thank you so much for that. Operator, have any questions come in the queue?
No, ma'am, we have no questions at this time.
Okay. So I had one other question, Kristen, which was you mentioned a challenge with the Parent Plus loans that I can't read. I think you said that they often are paid off before. Mm-hmm. Is it longer than 10 years? Are the requirements different?
Yeah, so Parent Plus loans only qualify for what we call the standard 10-year repayment plan, and so that means that you're most likely to pay it off within 10 years. There could be periods where the parent has chosen to take a postponement in payments either through forbearance or deferment, and so the repayment period may be longer than 10 years. But they're most likely to pay off the loans within 10 years unless they take these other options to postpone payments. So I usually tell parents who have Parent Plus loans, if they want to qualify for public service loan forgiveness, they should consolidate into a federal direct loan, consolidation loan, and therefore they become eligible for another repayment plan called income contingent repayment. And this is an income-driven repayment plan that's based on their income and family size, and so the repayment amount may be lower. And so therefore it would extend their repayment period past 10 years, and therefore they'll actually have an amount to be forgiven at the end. So it would maximize the benefit of public service loan forgiveness.
That's great information. Operator, do you have any additional questions that may have come in?
Ma'am. No, ma'am, we do not.
Okay. Well, it sounds like you did a thorough job and answered every question. You certainly had a lot of information there. I tried to put some of the websites up. I couldn't keep up with you because it was so much information. Oh, no, that was wonderful. But everybody can download a copy of these slides. Hopefully in a couple of weeks it'll be up, maybe sooner. So you feel free to get that information. And the transcript will be also there. So you can go back and get all of the information that you need. So I appreciate everybody joining us. And, Kristen, thank you so much for sharing all that knowledge with us. And we'll look forward to having you back sometime, maybe in next year, to update us on what's new.
All right. That sounds wonderful. Thank you all.
Okay. Have a great day, everyone. Operator, we're going to conclude.
Thank you. That does conclude today's conference call. We thank you all for participating. You may now disconnect and have a great rest of your day.